morning, everyone. Thanks for joining this panel. I'm very excited about today's panel because we have a great lineup of panelists. Jerry, who comes from an extensive mining background. David, who has a very exquisite take on how to use economics to solve scaling and security issues. Oh, yes, David.
You switched our names.
Yeah. Jerry coming from SBI and has been a Bitcoin evangelist for a very long time. And Jack, who has been involved in the application, building applications on Qiang. And he has extensive expertise on that. So I think one of the highlights from last year's Deconomy, if people recall, is this debate between Roger Ver and Samson Mao on the topic, can Bitcoin scale? Right? So since that debate, there's more and more discussions, debate, trolling. Of course, we're all living in the crypto Twitter world, and hash war happened. So nowadays, we're ended up with 3 major SHA-256 Bitcoin chains. And each one of those have their own philosophies and approaches when it comes to how to scale Bitcoin. And today I'd like to continue this discussion, and hopefully we can dive even deeper on each one of these options. So first of all, before we get into the details, I kind of want to take a step back and look at scaling at a higher level and asking this question: what do you think is the essence of scaling debate? There are a lot of approaches looking at the scaling as a technical issue and approaches to address that. Do you think that we're looking at things in the right way?
Hi, so I'm from a miner background, so a little bit of explanation for the crowd. Miners are involved in securing any blockchain. So for the SHA-256, which Ella explained, it's an encryption methodology where we all race to answer a question. And so what we're comparing against, or what we're racing against, is the improvements of computer speeds. And the best is to compare against supercomputers of the world. And over the past 20 years, on average, supercomputers would 10x their computing power over 4 years. And if we compare that to SHA-256 growth over the past 4 years, we've had 1,000x. So from a scaling perspective, I think like the mining ecosphere has provided a very robust 100x over supercomputers, and I think this would continue.
Cool. David?
Yeah, I'd say that I agree entirely with you. We believe that the scaling issue is fundamentally economic, and the fundamental cause is that if we take a look at the international internet, there's something like 400 undersea cables. They can move thousands of high-density movies around every second, essentially at the speed of light. So when we're approaching the scaling issue, one of the questions is, well, why is all of the money going into hashing, and why are we having trouble upgrading the network? And there are a lot of different philosophies about why this is the case, is it the case, and also how do we address them. So one of the big issues, for instance, is that a lot of the money is going into hashing because the miners are the ones that are getting paid. And the different Bitcoin forks, for instance, are noticing things like, well, who is going to actually pay for the peer-to-peer network? Should I be expecting Bitcoin to run on my home computer? Is it going to be safe if we expect people to be running much larger Bitcoin nodes in co-location centers, maybe the Wilshire facility in LA where the fiber optic cables come into the States? And basically, when we take a look at it, one of the big questions we see BSV, which is in some ways it's the purest form of Bitcoin, because it says, well, the miners will pay for the network because the miners are the ones that have the money to do so. At the other end of the spectrum, we have the core developers and kind of small blockers who are saying, well, we can't trust that the network will be fundable. We don't know that the miners will pay for it, so we have to keep it volunteer-based. And so all of these different scaling options are coming out of fundamentally different assumptions about who's going to pay for the network, but also who has the incentives to pay for the network, and are there misalignment in incentives that will rip the network apart if we follow this philosophy? Jerry?
Well, you pretty much, thanks Dave, you pretty much took mostly all my points as well. So if I were to say what I think wasn't mentioned yet, What is essentially the scaling debate? The scaling debate is people getting confused at what scaling means in Bitcoin, right? I mean, from our perspective, which is mostly from an enterprise business and institutional perspective, scaling means real use case, scaling of transactions. We have to have more and more transactions. And from a technical perspective, we don't care how that happens. We don't care whether that means increasing the block size, whether increasing the number of opcodes. We just care about more transactions. So whatever you can do as developers to enable businesses to push more transactions onto the network, that solves the scaling problem. Because the scaling problem is economic. If nobody uses the network, it's not worth anything. And the coin's worth nothing. So you guys are just buying nothing. You're all going to lose your money if you buy a coin which is not really having the right idea of how to scale, which is people need to use it. So whatever the heck they want to use it for. And so as David said, there's a lot of things going on where there's enabling of contracts be written on Bitcoin directly now. That directly challenges Ethereum's whole reason for existence. But to be honest, both of them are different takes on this whole sort of like smart contract on blockchain idea. So we should explore all ideas. But yeah, it's just we need to have more transactions.
I'll go a different route. I just cannot believe I'm even sitting up here in year 11 of Bitcoin talking about, what are we talking about? You guys seen that Allen Iverson practice video? What are we talking about? We're talking about scaling Bitcoin in year 11 with, what are we talking about? This thing, that's 10 years of wasted time for all of humanity, every single person in this room. I was first at a Korea Bitcoin conference in 2014. Now I'm at another conference in 2019 talking about something as basic as do we want more transactions on chain or not? How do we scale? I hang out with these lovely gentlemen and ladies as peers and friends, but why are we on stage talking about how to scale Bitcoin? I mean, this is like a joke to me. So if you can make something better than Bitcoin, please go ahead, make Bitcoin obsolete. But if you can't, then clearly we're doing something wrong about not understanding what Bitcoin was designed to be, and it's just, to me, very unfortunate that we're still stuck on this conversation and not on all the conversations about the things that people can use Bitcoin for to improve their everyday lives. I have no interest personally in being a technocrat dictating people here's how you scale this, here's how you scale that. That's how I'll just end it at that.
Unfortunately, we still ended up today still discussing Bitcoin scaling.
Yeah.
So let's explore a little bit more on what happened during all these years and what solutions that has been explored. How about we go one by one? Yeah? SegWit.
Separate?
SegWit.
SegWit.
Yes.
Do we really want to go into that? Is this a technical audience?
Let's stick on the economics.
Okay. I'll keep it very short. I mean, I'm going to make it not technical whatsoever. The reason why, as a business, SegWit presents a problem is because if you separate digital signatures from the actual transaction, there are legal ramifications, which means that we cannot use a Bitcoin transaction which has its signature embedded as a digital sort of contract. So given there's not a lot of digital contracts done on Bitcoin right now because people don't know how to use the original Bitcoin script, or the original Bitcoin script was disabled by certain developers, so they couldn't do it up to this point, so no blame being passed here. But if you'd use SegWit, then it can't be a digital contract. So that sort of eliminates a big chunk of use cases that businesses can look at. That's what
Anyone to add?
Yeah, I agree.
My viewpoint, actually, we've kind of segued from saying it's an economic problem to talking about specific technologies. I don't think they have a solution. I actually don't think that most people recognize the problem. There are two problems. The first problem is that miners have an unrestricted appetite for data that will make them money, and they're passing costs into the future. So there's an incentive problem there. SegWit doesn't solve that. On-chain scaling doesn't solve that. I mean, what's the philosophy of BSV is that it's manageable, and maybe it is. The second problem is that we're paying for hashing and we're not paying for the network. That's a free rider problem. That's an economic incentive problem, that someone else is going to do the hard work. They're going to provide light blocks for clients, and they're going to be providing all of the network bandwidth, and I'm just going to sit back here putting 100% of my money into hashing, and I'm going to be more profitable than all of you and eat your market share. This is not a technical problem. One of the big issues, I think, with these 3 forks is that people on every fork are assuming that they've got a technical solution, and because they're not looking at things at the underlying level, we have a lack of really reasonable discussion that's informed about, can we solve the incentive problems? I think we can. I think that the 3 forks may be able to manage them in different ways. Like maybe BSV, maybe the miners are going to be able to collude a little bit to prevent free riding. That's an acceptable solution, but maybe it leads to closing off the openness of the network. Maybe second layer scaling is a possibility too, but maybe there's some consequences for that as well. So I disagree that actually the technologies that have been proposed for Bitcoin to date are really good. I mean, Bloxroute, for instance, I know they're here. They're supporting themselves. You have, extend blocks and stuff. A lot of this is closing off the network or closing off parts of the network. Or it doesn't work if miners start acting in their self-interest when the Coinbase is done and they start hoarding transactions. So, I mean, I'm kind of with Jack. It's kind of like, why are we still here talking about scaling? I think the reason we're here talking about scaling is people don't know the problem. And the question is why? Why don't people know that these are economic issues?
So we have 2 solutions to this, right? I agree with you, it's economic. One solution is let's educate. Let's get the CFA Institute to start teaching people about scaling Bitcoin and technical problems. Let's have everyone, how about Vitalik, you set up a university, we can all go to your school and learn about how to scale all the different sharding technologies and every single word I have to keep up with. That's a solution. I'm sure you get a lot of tuition fees that way. The other way we can scale Bitcoin is just basically watch what happens with economics. See, the average on-chain transaction on the BTC network in 2018 was $11,000 as of the end of 2018 prices. So something like 3 to 4 Bitcoins per transaction on-chain. The average transaction on the Ethereum network is $3,000, roughly. So for all the talk about blockchains for micropayments or whatever, we're moving sizable amounts of money on-chain. Why is that? That is because the #1 use case today, which I kind of help build a lot of these exchanges as well, which are useful, but the #1 use case in crypto today is speculation or investing, if you want to call it, and then you want to use the chain to kind of move your funds between one exchange to another. Therefore, clearly no one wants to buy 10 cents of Bitcoin on exchange hoping they can go 100x margin and make 50 cents. That's not really ideal, right? So when you are moving all these coins on-chain in such large amounts, whether one chain is scalable to 1 megabyte, another chain, BCH, scalable to 32 megabytes, another one right now 128 megabytes, with varying fee differences of $3 versus 10 cents versus 1 cent, to me, none of this really matters as a user because I'm trying to move $11,000 on the chain. And that's why getting listed on exchanges right now is so important because if you get on the exchange first, you were first to the eyeballs or the clicks on that exchange with the user base. So BTC today looks like it has much more of an advantage from a price perspective because it's been on exchanges the longest, right? So therefore, hash follows price because obviously it's like a arbitrage issue. So if I'm a miner and BTCs are worth 12.5 Bitcoins times $5,000, I'll spend this much amount of money investing in my mining for BTC. But what's going to change very quickly in the coming years is if you can get enough viable transactions that are happening on-chain that are $1, that are like 10 cents, that are $2, then nobody needs to ever have a scaling debate ever again because the sender and the recipient, no matter, the sender could be the founder of a chain. They do not want to pay an extra $2 to move $1. They want to pay like 1 cent, given equal security. So what I think will happen is there will be some explosion of transactions on-chain that will then recoalesce the entire industry back towards a dominant chain, whatever it may be. That's how I think you resolve the scaling debate.
So speaking of micropayments, I mean, one way that BTC chain is promoting is using a Lightning Network to solve micropayments, right? Do we think this is a viable solution?
Technically, I'm probably no comment. I mean, sorry, I just jumped ahead there. I assumed that you were.
I want to hear what
open
you
question.
say.
But it's about who pays the miners more.
That's definitely
Yeah,
a part
I mean,
of it.
one solution is we all just go put our funds into one company and then just have off-chain like that. But if that doesn't pay the miners, then why are we here? Because you then do not have a blockchain anymore. You are reversing yourself into a private blockchain is what is going to happen.
That's the miners.
I just
A
want to
decentralized private
back up
blockchain. Yes.
Jack there on the mining side. So with SHA-256 protection, it's a competition for the hash rate to protect your chain. And yes, price dictates hash. So the problem with Bitcoin mining is that there's a block subsidy, which reduces over time. So we've got to think about the word subsidy. This is just built into the system, so we invest early into the infrastructure. But it's a matter of time before the TX fees have to become important. Now, price dictates hash. I always stress this very strongly. But it's actually not good. Price goes down, hash rate goes down, security goes down. All right? So right now, we're racing. We have to race to figure out this TX problem soon. Because when TX fees, people are using it for real-world use cases where there's value, then no longer does price dictate hash. It's the use that dictates hash. And how much time do we have to get there? Maybe 5 years, 10 years? I don't know.
Okay. I'm just going to take it back to the reason Lightning for a second. So I'm going to avoid the technical discussions of Lightning because that's probably better in a developer conference. But the issue that I see for enterprise use of Lightning channels, or I mean payment channels in general, I mean payment channels are very, very useful between two parties, but like a global overreaching sort of like, you know, Cthulhu octopus sort of like massive network of payment channels. The problem there is that the question we have is how would we basically report on all the transactions? Because as institutions, especially financial ones, we have to abide by like Basel III and SOX, sort of Sarbanes-Oxley regulations, and part of that is keeping records for all sorts of transactions. SWIFT, you know, basically handles this, and some sort of SWIFT competitors in blockchain space like Ripple can handle this because they stores all the transactions on their chain or a database. But in Lightning, how would we do that? So if the auditor came and basically said, show us all your transactions for the last 5 years, if they're all on Lightning, then we'd have to keep our own records. So if we'd have to keep our own records in our own database, how is that saving me any money over our existing back office system? I don't know. So that's kind of have to be a question that has to be answered. And maybe there is a way, but I haven't been keeping up to speed with all the Lightning developments on their business arm. So maybe they have a solution. I just don't know about it yet. But that's the biggest obstacle from institutions.
Can I point something out, which I'm finding really interesting, is we've kind of been sucked back to 2015 where we're talking about blockchain as payments. Right? Yeah. If we're talking about blockchain as scaling, and I mean, I know BSV is thinking about this with MetaNet. They've been thinking about it for a while. Like, why do I want a blockchain? It's not just for payments. And I think everyone in the space, I think we'd all agree that one of the big issues for the bear market, and people are having trouble moving money into crypto. Right? Like, I live in China, and it's probably the easiest place to buy crypto. WeChat is still easier. But what I want to use a Bitcoin class blockchain for, I want to use it for decentralized WeChat. I want to be sticking keys, SIGs inside that op return field. I don't want to be using the blockchain as a store of value. I want to be using it as a universal broadcast network that no one can man in the middle. And for me, like I look at Lightning, one of the reasons I'm not interested in payment channels is because it's old technology, and I don't need a payment channel. Like, that's solved for me. What I need is decentralized WeChat. I need all kinds of data-rich, intensive applications where maybe, like, we just use the blockchain to connect our IP addresses, and then off-chain we start sending data for games or all of this stuff. And for me, this is where the really interesting applications for blockchain come. It's the stuff we're working on. I know BSV is working on it. BCH kind of feels like it's muddling its way through. But, I mean, payments. Okay.
Can I just add one more thing to this? Because what he mentioned, I mean, like, so what I've said so far about like storing records is kind of like the problem, but you just sort of triggered my memory here is like, I mean, we have, one of the innovations of blockchain is that if there was only one global ledger, then we could actually save costs from a business perspective. Like our back office wouldn't have to store multiple copies of databases. And if every company didn't have to store their own database, then, well, guess what? Then you can't really cheat on your accounting very easily, right? Because how you cheat on accounting is you keep one set of books for the auditor, and you keep another set of books for the China deals, and you keep another set of books for whatever, right? And whenever somebody asks you questions about where your transactions are, you grab it from a different database. That's kind of like why we have auditors, and that's kind of like why accounting exists, because you want to basically make sure that there's no cheating on that level. If you have a global ledger, then you can't cheat because everybody's storing in the same one, right? And the problem now is that we're just forking all these different blockchains and saying like this is an innovation, this is an innovation. Well, it's not. The fact that you forked another ledger means it's not an innovation anymore, because if everybody uses a different ledger, we're not really saving anything over databases, right? Multi-user databases. It's been around for 30 years. Look it up. So I think if everybody just like simply put their records, but encrypted, of course, onto one ledger, then doesn't that make accounting so easy if our compliance department said like, show me all your records for the last 5 years, or regulators come in, it's all in the blockchain, right? All the one blockchain, or the one that all the banks are using, or whatever like that, and it's encrypted, and everything is keyed by private keys. So I think that's the part that maybe developers should really look into. How write us tools so that enterprises can manage keys, right? We have a key like our Uber key, and then under that Uber key, private-public key pair, we have like, our accounting department, our products department, our sales department, our marketing department, they have their own key. And then under that, you have a sub-hierarchy of keys. And every time you do a transaction, use those keys. Now it's all trackable, of course, encrypted. And then when the government comes in, then you just show them all. And I know there's a lot of people who are very anti-government and whatever. We operate in the world of laws, so we like to operate within the government's laws. And so yeah, maybe there's a privacy issue that we need to address here. But I think if we start doing this, then maybe the next step is we say to governments, hey, why don't you put all your budget on the blockchain? And then we can see where you're.
I think it's an interesting point, because when people are thinking of Bitcoin, the narrative has always been it's cash, it's payments, or it's digital gold. But people don't think of there's all the other use cases that can be done on the Bitcoin blockchain. So the question is, what kind of fundamental, the base layer infrastructure is needed, and features that's needed to facilitate all kinds of thousands and millions types of use cases?
I took up a lot of time, so I'm going to let somebody else answer.
The way you make sure that you are welcoming to all kinds of use cases is you make the chain as slick, as fast, as cheap, and as scalable as possible. Mm-hmm. That's the only way you invite use cases. Imagine you're the Apple developer store, and you're like, we only want to accept apps for payments. Who would build you WhatsApp? Who would build you Uber? No one. You have to have an open stance towards what you're willing to invite. And if you call certain transactions spam, and you want to call other transactions something else, then that is not very inviting. You're not going to get all these use cases. Mm-hmm. And then you're going to end up with a whole bunch of different chains, and then you have interoperability protocols coming. Like, that just does not make any sense at scale, because if I'm a rural worker in Thailand, I don't care about this industry. Okay, I am in this industry, and I'm almost fed up enough to not care about this industry. Okay? What you want to care about is efficiency. And the reason why crypto right now is not as efficient as the traditional payment system, because when I at least use my JP Morgan Chase card, I am using a centralized one JP Morgan Chase system. When I use crypto, I have to hop between different chains and go through 3 different fees. That is not going to scale. Okay? And forcing me to go into a Lightning network to go to something else, that's not going to scale. So the person. So look, I agree with Jerry. It'd be nice if we were all on one chain. That should not come from decree. It should not come from you or me or anyone else saying, hey guys, let's just all use this 3-letter ticker. Let's all use that. This comes from the genius of the design of Bitcoin, which is that the very miner of Bitcoin has every economic incentive to make sure that the economic activity happening on the blockchain happens on their one blockchain that they're mining. It is not about mining 10 different blockchains and being like, I'm diversified. It is about making chips and making scalable blockchains that are welcoming for every single person to do the activity on the one chain. And Bitcoin is working because the miners who have diversified into multiple chains have taken a hit for that decision. And so we will see this reconverge. I look at this today, the recent 2-3 years, I believe, will be remembered as a blip, a little off-track kind of phase of Bitcoin. And we're going to get back on track very quickly in the next 1 year because, like Peter said, when the halving reward goes from 12.5 to 6.25, you better have some transaction fees. Otherwise, why am I still mining that chain?
I'm not as futuristic about what tech may last forever. But I think what's more interesting is to look at the low-hanging fruit. So we have some low-hanging fruits in this industry now, which is producing a lot of TX fees, Tether in particular. And we've seen Tether move from Omni to ERC20, and now there's Tron. I think this is interesting because coins are now forced to compete for the same product, which is producing the TX fees, and that will show. I think there should be more of this. Right now, we've solved the block size issue. There's plenty of space. We just got to fill that up. More experimentation, more, I mean, on this panel, we're all actually entrepreneurs. You know, we should do more of this risk-taking. Think of new products, try it. If it works, great. And if it doesn't work on this chain, move on another chain. I think the urgency should be more on developing products, cross layers, and let the chains decide.
I mean, I just say two things. First is I don't necessarily know if miners are behaving rationally. I think the BCH, BSV fork showed us in some instances they're not. I mean, why on earth there are BTC miners permitting all of this hash power to emerge outside the chain they control so they can rent it because...
Yeah, they're not behaving rationally, but it's designed so that if you don't behave rationally, you get hurt, which is working.
Well, no, I mean, they're more profitable doing this. Why don't the BTC miners crush BSV and BCH, which reasonably they should for security reasons? Because nobody wants to take the hit and leave and make mining more profitable for everyone else. So, you know, this is maybe a different discussion, but I'm not sure that holds. The one thing I wanted to maybe contribute to the question is I just spent some time in San Francisco with Richard, my co-founder, and we were shocked because we're talking about applications. Everyone there seems to think that Web3 is going to be built on these complicated smart contract systems that are mirroring data everywhere. And what about the UTXO system? We don't need the application on every computer in the network. And I actually think San Francisco is yesterday. I think it is really behind the time. And you know, there was a speaker yesterday who was talking about how progressive things are because it feels very clean and like the engineers are working on these tiny problems. And it's like, well, that's great, but you know, you shouldn't be working on this narrow problem. You should be fixing the table. And I think that, you know, I'm not sure. I think there are various solutions for Bitcoin scaling that are being experimented with. I'm not sure which one works, but I think that the one that works, the UTXO set is where applications are going to be built, and smart contracts will be viewed as an extremely useful but much more narrow tool. And maybe the frustrations people are having with Bitcoin scaling is maybe really distorting the way the industry views smart contract systems. And it's leading people to be like, Ethereum, EOS, let's build the internet on that. And it's like, no, let's build it on a UTXO system that just takes whatever data I throw at it and gives it to the guy encrypted who I want it to get.
I guess I have one word of encouragement for all the entrepreneurs watching or in the audience. I would want to measure your career based on how many transactions on-chain you're able to deliver, whether you are just using Bitcoin or whether you are building products for people to use. Measure yourself on that. You'll be proud of that years from now. You'll gain financially from that years from now. Don't measure yourself based on the valuation of your company in fiat terms. Don't measure yourself based on how much crypto you have. I think it's very interesting that, you know, crypto today is just a mere copy of the world before the blockchain. So we had a Forbes list ranking the richest people in fiat, and now we have a new updated Forbes list ranking the richest hodlers of crypto. Measure yourself not by how many coins you own, measure yourself by how much transactions you are part of delivering. Because those transactions represent something of real value that you have delivered to somebody and somebody else.
All right, now we have a new Forbes standard for 30 under 30 and 40 under 40. Let's see when it's going to happen. I want to address one thing that, David, you brought up about mining. So you mentioned something that miners are not necessarily rational right now. So I want to explore a little bit further. Like, what are the things that miners should care about, and what kind of timeline they should look at?
I mean, I think miners are doing what they get paid for, but Peter, this should be you, right?
Yeah, I think there's some misconception about what mining does. We're basically encrypting your transactions so they're safe, unhackable blockchain. And I mean, if you were to draw a comparison with the investment in internet, we're doing the underwater cables, fiber optics, and I think the important part now is we've done all the investment. There's just not enough content throwing through it. And bad thing about mining is that it's not like undersea water cables where they just lie there. If the TX fees are not enough and the block subsidy tapers off, it's game over.
So I kind of see the miners as the archivalists. I mean, if blockchain can be seen as an actual, like, say, infinitely write-only Turing tape, computer science term, I'm sorry, or like the irrevocable record. The miners are the ones who archive things, and I think the industry has focused too much on the miners being, settling things, but maybe, settlement doesn't have to happen on chain. There could be so much more done in, before confirmations, right? All these transactions go back and forth through the mempool, partially signed. There could be deals done. There could be contracts negotiated. And at the end of the day, the miners just basically print the one that is executed. They print the final copy of a fully signed contract. And I think people don't realize that there's so much you can do before the archival version of the file is put into the backup storage, which is what miners do, and we pay them for that. But nobody's thinking about all the money that can be made before somebody throws that, signed documents into the file cabinet in the archives library. You don't need miners to, settle. It's just, if we wanted to send money or do a contract with each other, we just keep on, passing transactions back and forth. He signs his part, I sign my part. Any of us can publish,
I've got a question for both of you. When Bitcoin, let's say we get the current models of Bitcoin and it scales up to terabyte blocks, and the Coinbase is gone. So the only source of revenue for the network is fees. Peter, are you going to, if you're paying money to collect transactions from users, because somebody needs to do that, and we've got a scalable model of Bitcoin, we've left the idea that it's a free volunteer-run network. So you're paying real money to collect these fees. Are you going to propagate them and share them with other miners in the network, or not? Like, I think this is part of the problem. So we're not disagreeing miners need to get paid.
We got to get to that problem.
We're questioning,
we'll never get to that problem.
No, I think the issue is with the machines that you invest, they're fixed. Same with undersea cables. You're not going to dictate what flows on top of it, right? So it's a different issue. I think you're trying to think about the node operator.
No, I mean,
issue.
I'm thinking about the Bitcoin. I'm treating the BSV model, the economic model, as the scalable model of Bitcoin. I'm just not sure at scale. I mean, the Bitcoin economics at scale, I think one of the questions is we do have this uncertainty over whether it works. I think everyone here is skeptical of the small block approach. It's not secure. I mean, how many fees can they possibly have? I see the scaling issues with, are we going to get inferas developing that are going to control massive amounts of user traffic? And if we get companies like Infura that control massive amounts of user traffic, why aren't they going to start monetizing transaction fees? And if they start monetizing transaction fees, well, what happens to the miners? I mean, does the network close? I don't think we know this. That's more what I was getting at when I was talking about incentive problems. I don't think they're unmanageable, but I don't think, it's not really just a question of, are we paying for hashing? This is what the miners do, and that's what we're doing. Jack, I mean, you're sitting
I think it says our time is up.
So I think I have
You want to
one
have a final question?
One last question. We have a lot of discussion and debate around scaling, but kind of want to end this panel with something that we can all look forward to. In a few sentences, can you describe in the future world when Bitcoin actually operate at scale? What does that world look like?
I think you have 100 times more on-chain transactions in the next 3 years than you have right now. All blockchains combined.
I think if it's scaled and everything was fine, we have a chance at a global ledger where all transactions are private, but also transparent. So, if the authorities say you have to show your stuff, you got to show your stuff. But then maybe you should be able to demand your authorities to be able to show their budget as well. And I think this sort of like double checking, where we check each other kind of thing, is currently not in our existing financial system. The checking is only one side. Authorities check you. But if we can check the authorities too, maybe that balance of power is how we get the most sort of fair sort of treatment of accounting. And so I hope that one day will make a more fair system, more fair society.
I think the business model supporting Facebook and supporting Google goes under severe threat. So one of the fun things I think from Asia, looking at, you hear Facebook's worrying about stable coins. It's kind of like the captain of the Titanic worrying is, are we air conditioned enough inside? But yeah, I think it's going to be tremendously disruptive to anyone who's locking content to advertising, because advertising will decentralize and go on-chain with scale.
I agree with Jack. I think there's only one metric, use cases and TX fees. Yeah.
Well, thank you very much for the panel. And I sure hope that in the near future, we don't have to come to conferences and still discuss how Bitcoin works and how Bitcoin should scale. Thanks.